It looks like I'm live. Mic check, mic check. Hope you guys are doing well. As soon as you jump on, please give me a sound check. Just want to let everybody know on the public Telegram group that we are live, and on the private Telegram group that we are live, and then we can start operating. And everybody on Facebook know that we are live. We are live. Ladies and gentlemen, good afternoon. Wherever you are in the world, Kenya, South Africa, Lesotho, Swaziland, Zimbabwe, Namibia, Zambia, the Philippines, Dubai. Where else do we have some students? Botswana, definitely Botswana. Yeah, good afternoon, all you wonderful, amazing students. Shake my hand. You haven't seen me do a handshake in a very long time. Welcome to another war room, right? I believe we said this is war room number 55. Wow, war room number 55. Obviously, war rooms have been continuing since last year. I'm tracking everything that I do in the financial markets. I've got a 5-year target of how much I should have done. Hey, what's up, man? Can you hear me, Mbasa? Loud and clear, I hope. And so I've been tracking that stuff. What's going on here? There we go. So I had feedback in my ears right there. Right. So I'm just numbering these things to keep track. Right. So if you can hear me loud and clear, let me know. I'm gonna start. Sorry for the delay. War rooms normally should start at 4:30 p.m., but my partner forgot. And then she got bogged down in meetings. Something big is happening in her life this week, and her team are preparing for that. So I do apologize for starting late. Fantastic. Thank you for the clarity there. Right, so let's start, guys. I'm just gonna run down. I mean, honestly speaking, deep down in my heart, I wanted to say welcome to this week's episode of Cartoon Network. Right, markets have just been a series of Cartoon Network. Like, it's just been proper, messing around. And I'm gonna go through a couple of themes. I don't want to get bogged down in themes today, to be honest with you. I don't understand, the value of that anymore, because at the end of the day, markets, until things are clear, until there's what we call investor confidence, markets are gonna keep playing the fear stuff. They're gonna keep playing the panic stuff, which I've been covering, I think, week to week. So that, thank God I've been on the money when it comes to that kind of stuff. But it's just to see if we can pick up any new themes. Number one, right? Number two, to see if themes are going to continue as they are, because if they are, then we need to kind of like adjust accordingly. I would also like to just make an announcement that in today's war room, I'm happy to take other people's charts, but I actually want to go back to a lot of the stuff we've looked at and that I still haven't put pending orders for. My instincts were not to do so this week, and just to see how this war was going to play out, right? Most people were of the opinion and the mindset that if war breaks out, right, that if there is a war, then war would have to have happened this past week. Markets kinda, in my humble opinion, and I could be wrong, and I'm happy to debate with whoever wants to debate, but in my opinion, markets did try to price that in. Markets did try to price in a potential war, but the war didn't happen. So what's happened is a sentiment play has been done. And maybe let's just start with the obvious when it comes to sentiment play, right? I told you guys that as long as okay, look, this is my opinion. I can't say I read this from the chart, so my usual work would be, flustered with evidence and all that kind of stuff. This is simply, where do I hide this? There we go. This is simply just my opinion, right? I think we will get a mixed sentiment up until oil hits $100. And I think I've been very clear about that in all the previous war rooms. I've been clear about oil being bullish. I've been clear about why oil needs to be bullish for Russia. And you can see, these two red candles happened this past week. All of a sudden, the sentiment was, oh no, oil is coming down because Russia is pulling back, or there were reports that Russia is pulling back. There were reports that there won't be a conflict. And then all of a sudden, things changed. Russia, I can tell you now, things that I know for a fact are Russia has more people at the border of Ukraine, more troops, about 100 and something thousand, 150,000. Ironically, believe it or not, Russia and Ukraine and wherever else is involved are also engaged in training drills. So get this, there is threat of war, but at the same time, there are scheduled training drills, right? And the scheduled training drills are just that. People are just training. They're not there to kill each other. They're just here to shoot things down, and it's part of a training exercise. So now you have to decide whether the extra soldiers are part of the training drill or an advancement to war. I'm not a war expert, right? This just sounds like a game of chess to me. And I think the game of chess will become clear. So watch out for this, because if this happens, right, which I'm pretty sure it will, sometime in the next week or two or so, we should hit $100. You guys know the rest of the story. There will be global recession. That's a non-negotiable, right? Non-negotiable. Recession generally comes straight after. But if you've been with me for a very long time, in 2020, I announced that we're in the lost decade. Markets go through one difficult decade every now and again, and this is it. The lost decade is made out of cyclical crises, so small crises boiling up every now and again. And I've been waiting for this for a very long time. Not the war. I am not pro-war. I am very much anti-war. But the markets will use whatever they use to get the results they want. Bitcoin, real quick, there should be nothing at all shocking here. I mean, I think this chart should demonstrate the power of supply and demand, the power of 365 Trading Academy. We received bullish news just last week. I mean, I can prove it to you. I mean, Buffett pro Bitcoin. There was some massive bullish news for Bitcoin this past week alone, where contrary to Bitcoin in a slump, blah blah blah. Here's why Buffett hated it. Buffett, where's that silly thing, man? Yes, there is. So 4 days ago. What was when this was published? The biggest hater of Bitcoin, was actually one of the world's smartest minds. So he's a hater, but he's actually still incredibly smart, right? I have so much respect for this man. I pretty much studied his game for stocks. On the 16th of February, so just 2 days after Valentine's Day, so Tuesday night, it happened in South African time. Then it was reported on Wednesday. Tuesday was the 15th. Bitcoin, who used to call it red poison. Warren Buffett invested $1 billion in a crypto-friendly bank. That bank is actually a very important bank. That bank is linked to how El Salvador is running the entire country on crypto. That bank is also linked to a specific token coin, and I'm going to do a whole thing on crypto this coming week. Where you need to know the coin that El Salvador is running their national wallet. So just to be clear, they created a specific wallet for everyone in El Salvador, and there's a coin running that, which is actually off the Ethereum chain, which I think is a very good coin to invest in. So I might decide to throw that to the Wealthy in 3 Years members. I might make content out of it, but all of this will drop this week. So we had massive news around crypto. Everything around crypto was yearning for a buy. Like, there was rejection here, there was a demand here that I told you. If you come to war rooms all the time, I told you this was going to break. I told you, do not buy. I remember saying this. It's recorded. Just go to War Room 54 and 53, 52, 51, and 50. I've been consistent the whole year, right? And so finally, I say the first levels that are going to come at play is my 37,000 US dollars, right? And we just tagged that today, literally today. And I think there might be a deeper tag at this level here, 37,427. There's a better imbalance there on the daily time on the H4 chart. As it's not a signal to buy. I am not telling you to buy. I also noticed that when price dropped, it was relentless to this Talitha area. I told you, see this level here? I told you that was going to get taken out, and they took it out, and they created the exact same structure. 365 traders, all part of your module 1 in the course. Just go back to the basics. I saw someone, I think it was in Basel, said he's rewatching the videos. Literally, just go back to the basics. Module 2 is just nice and flashy things in there. What you want is inside these 4 big folders. All these videos are your prime source. There's nothing new that I'm doing, outside, especially in the war rooms and in my long-term swing trades, right? So we've got 2 Talitha areas. One was a bullish one. This one is a bearish one. And so I am not a cowboy trader. Cowboy trader in the war room is a trader who try to use their capital for short-term gains in a high risk environment. When I say this is a cowboy trade, I'm saying if you want to trade, it's your money. I am not your financial advisor, right? It's up to you. I'm just here to walk you through this theory, let you see how I see the markets. And I'm telling you now that I will not be in this buy. This buy could make some money. It could make some money up until there, right? I'm not convinced. I love conviction. I like to move when smart money moves, right? So this week, maybe by Tuesday, if not tomorrow, I'll do a full crypto video for you guys. There are a lot of things I'm scared of. For example, I'm scared of the possibility of the United States government being able to confiscate crypto, not crypto in your hard wallets or in your separated wallets of the network. I am only specifically, please do not panic and start doing silly things. I am referring to the United States government's reach over exchanges. All right. So I'm still doing a very long study on how it is that they got every single human being back in the 1870s to give back their gold. It is my conviction and my opinion that economic history, because it is the history of humans and humans think one way, governments are a class, citizens are a separate class, they repeat patterns. I think the same tactic is going to be rolled out. Now, to be very clear, and I'll be clear in my video Monday or Tuesday, they're not going to steal your crypto. They're not going to just take it and then leave you high and dry. That would be, daylight criminal activity. They will, however, offer and force to buy it from you. All right, and then manipulate the prices, etc., etc. So naturally, the simple strategy is to remove it from exchange. You keep 50% to 30% to 40% of your money in crypto in exchange for you to trade and transact until that day comes, and the rest of it you put it in a place where it can't be taken. So separate wallets off the network, hard wallets, there's a whole list of stuff, but I'll cover that, for everyone's sake who's new to the crypto game. Between now and up until the day I drop the video, don't panic. Don't do something because Leroy didn't do ABC. If I get busy tomorrow or Tuesday or Wednesday or Thursday and I don't drop the video, still don't panic. There's still enough time. What I'm doing is trying to foresee the potential dangers that could be rolled out in June, July, August, right? But I want to make sure everybody is aware of them, right? When it comes to Bitcoin, just as my conviction has been very clear for the last 3 to 4 weeks, I'm not changing it. I want to see this area taken out. If it's not taken out, fantastic. The portfolio does well, but I'm not jumping in on a trade and I'm not buying. I'm definitely buying somewhere in here because it's about to be the end of the month, right? So I'm buying to invest. I dollar cost average every month end on the 25th, 24th, 26th. Whenever my partner starts doing the monthly expenses for the house, our crypto and our investment and our 10% rule is the same as buying bread or milk or whatever is important in our lives. It is literally part and parcel of our planning. So it is nice that the whole month of February, I get to dollar cost average down here. Dollar cost averaging means I'm buying into my wallet. It does not mean I'm taking a trade. I'm going to do the same for Ethereum. I'm going to do the same for XRP. I'm going to do the same for metaverse coins. I'm going to do the same for most of my altcoins. I'm just going to dollar cost average. But deep down in my heart, for those of you who know, I want this level taken out. I want it contested. And I'm pretty sure, if we have the same week that we had last week, market uncertainty, hyperinflation, massive stagnation, Biden, all of a sudden wanting to finally move on regulation of the crypto markets, as he's about to announce that sometime this coming week. And also the fact that 3 days before that, Warren Buffett just spent $1 billion into the crypto market reminds me of how smart money operates all the time. Push price down to buy low. It's the simple game. So if this gets taken out, then we need to just all pretend like there's a free fall, yada, 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 boom. But before you know it, we're back at 30,000 US dollars. And that's going to be a very, very, very strong area to break, right? 30,000 US dollars might be the breaking point of the crypto markets. 30,000 US dollars is a patch. What's a patch? Well, this weekly demand in red here, those of you who've done my course or know about supply and demand, there's a weekly demand here. This whole area is a weekly demand. I'll show it to you on the weekly time frame. I don't want to teach today, guys. I just want to, because we're already so behind with time. So I'm just going to spend time on Bitcoin, then we're going to move. Right. So this was a demand once upon a time. And I showed it to you that it was at the beginning of a massive QE, right? Where last year when QE was needed, price rallied. Price has now come full circle, January 2021 to January somewhere here 2020. Price did the 1 year walk. We believe at 365. Markets think in 3 months, take profit in a year, in a 10-year plan. So markets have done something incredible here, almost making, trying to make, imagine if this is like a massive head and shoulder pattern. It will take more weeks to uncover, but 2 months from now down the line, I would not be surprised. I would not be surprised if we land here. And I've spoken about this many times, 20,000. But for us to get to 20,000, every single retail trader, short-term holders. I think last week I showed you guys, was it Glass Snood, right? I showed you guys that short-term holders, when it comes to cryptocurrencies, are literally the people who are going to suffer the most. The people who don't want to join the academy, want to do it on their own, no offense. The people who are not in the Wealth in 3 Years program, or the people who, because they saw a headline that Bitcoin did a new high, an all-time high of 65,000 US dollars, and we're going to the moon nonsense, and bought all here. Those short-term holders, in terms of trading psychology and investor psychology, they do not at all, literally do not at all have the stamina. Hasn't Glass, it has, absolutely, Mr. Kakoma. I thoroughly believe so. But the problem with crypto, and you must remember why crypto is slightly different from currencies, is crypto is also the will of the people. So Glass effect is definitely done, and price has broken this entire area of value. Thank you for pointing that out. But the will of the people is something to always be careful about, and it's seen as a patch. You see this there? As soon as that demand was broken, a new demand was formed, and this demand needs to break. You see, this is a bullish engulfing pattern for module 2. We cannot ignore it, right? So I agree that, so I've got the whole zone marked red, which to me is a bearish signal, right? So we knew last year that whenever we come back to these levels, we must be very much aware. And people kept saying we're never coming back, right? Clearly they were wrong and we were right. Now that we're back, the problem right now is there is a bandage here, right? A strong tag, and it's at the psychological level. With our 365 numbers, psychological levels, a good number that every human being can get behind is 30,000 US dollars. Another psychological number in the markets is 20,000 US dollars. So what I'm saying is we're going to have to first see this break, and when this breaks, the markets have to contend with the power of the people, the will. Lots of retail traders are going to literally put their hard-earned money to defend this level. And the only people who will be very much well-fitted, well-suited to do that would be the whales. So if the whales jump in at that level, that's absolutely fantastic. We appreciate that. But as you can see, the supply of this crypto coin, oh my goodness, I highlighted the wrong place. The supply of this particular coin keeps changing, right? Like we're about 18 million. Give or take. I think I showed you all this stuff last week, so I won't waste too much time around it. But my point is, short-term holders who bought very, very high are really in trouble. Short-term holders who bought this coin very, very high are absolutely in trouble. The number of active addresses really hasn't changed that much, although you can see that some people are slowly starting to burn their wallets. Some people are giving up, and those are the short-term holders, right? Long-term to short-term holders. Long-term holders are obviously people who bought right at the bottom, or people currently holding, from about 30,000. So anywhere from here, just below this FOMC level, somewhere here, right? You're a medium-term holder, to be honest with you. 20,000 and below for me would be long-term holders, right? This is about, just before COVID, right? December of 2020. That these and everyone else below, though, your absolute early adoption people will be long-term holders. Anyone who started to buy and hold above 20K is going to have to really feel the pain. And that's my opinion, man. I could be wrong. Retail traders could defend this area, right? But for Bitcoin, I suspect we are bearish. We can tell, markets are telling us that we are bearish. The Talitha area, this gray box, created a daily supply. A daily supply has made contact with somewhat of a daily demand, Module 1 365 traders will tell you that this is a technical a market reversal signal. If you listen to those at retail traders, the gurus, this is a retail, I don't know if it's called a morning star or whatever it is. I've forgotten all these silly patterns I used to learn back in the day. But from a supply and demand perspective, this means nothing. This is just a retail trader pattern. It is a bullish retail trader pattern, but this is not a bullish engulfment candle. This is not a value-based demand. The imbalance is way off. It is not strong. There is a sharp impulse movement, but it doesn't honor our imbalance rules. So I am not necessarily excited, right? I've drawn an area of value there because it makes sense. I did find a demand, an H4 demand at 37,427 that someone like me could get behind. So then I'm like, okay, fine. That weird daily pattern is sitting on a very small H4 demand over here. But for the most part, I'm not that excited about buying Bitcoin here. So I won't. Right, now let's catch up with the sentiment as quickly as possible. This old lady has COVID. I mean, I'm an African, guys, so you forgive me, it is my channel, but I after being colonized, I tend to choose how empathetic I am to the Queen of England. But anyway, she's got COVID. Imagine if the Queen dies. I'm not saying she should die. I don't want anyone to die. I am such a pacifist. I love life. I'm an anarchist. I'm all for humanity and all that kind of stuff. I'm simply saying, if she has COVID and she's like 90 something, isn't she the oldest queen in the world? Like in terms of world's longest serving monarch, right? She's seriously old. Imagine if she dies. What do you think is going to happen to the British pound or to the euro? What do you think the entire euro block is going to do, right? So I come here, I'm looking at the pound, and I'm like, okay, what's my governor saying? Because the pound has already got preset money. It's already got preset money. Surely 10 years ago, surely 5 years ago, surely when COVID started in 2020, 2 years ago, there had to be a governor, a banker, someone to go, what are we going to do if our queen dies, right? Surely there is money hedged on this. Market is a simple game of rich people making bets on everything, on the emotional human connection of everything. The pound has been playing a lot of mind games, right? Trying to push up, not even pushing up, just basically trying to hold on. We've been talking about this, but the pattern of the pound, whether it likes it or not, will follow the pattern of Euro USD, which last year was our longest serving swing to positional trade. It literally gave me at least 252% on my portfolio. We kept selling Euro USD because we're very clear on its direction. Pound USD made contact with a short-term demand on the other side of a trend line. There it is there, made contact. We accept that. But we also know that these demands are short-lived. Euro did the same thing. It hit a demand, went back to a supply, then when it came back to a supply the second time, it took out a demand. We've only just hit the demand now. We've only just started to go back and negotiate with the supply. Sooner rather than later, we should be coming back soon. If you look very carefully at the pound index, at the pound currency index, there's a supply on top of supply. It's a very, very interesting thing that markets do. When it's going down, I like to call it the ladder to hell. When it's going up, demand upon a demand, it's a ladder to heaven. Price, there's a lot of sell pressure there. I can see it, right? We're just waiting for markets to give into that pressure. If I clarify this chart and go a little bit deeper into the weekly time frame, you will see markets rallied from that monthly demand, rallied strongly into what we call a weekly supply, give or take. All right, I'm just going to start to clean out these areas of value, right? So we've got a situation like this, governing demand into a mayoral supply, price drop, fresh touch, and an attempt for a retest. If I give you normal candlesticks, this is what you're looking at. Strong gap to the downside. I owe someone a gap video. I should write that down right now, actually, and then make it. It's not going to be a long video, but this year, if you ask for something, I should make time to make it, right? It's important, right? So that's what's going on here, right? So just imagine. So it's a trade idea. Write it down. Don't be caught off guard when all of a sudden price is falling. There are places where I want to sell pound USD. There are specific places on the charts where I want to sell Euro USD. But what are the markets going to wake up tomorrow, right? Or what's the sentiment when tomorrow markets open and everyone is like, damn, there's a potential war in Europe. Oh no, the longest serving queen in Europe has COVID. We were told at the beginning of this thing that COVID is lethal to old people. Probably the queen's blood is layered with gold and silver and precious what. So she might actually be fine and have the best. She has received 3 jabs, yada yada yada. So she might be well taken care of, but she is 95 years old, right? So this is a thing to look out for. I don't know. I don't trade news, but I understand it could affect sentiment. All right. Moving on as quickly as possible. Right, there's an angry farmer. United States listed Chinese stocks. This is important. We were one of the first people last year in the war rooms to track the Chinese market crash. You go through all my videos on the Evergrande crisis. Last year, by the way, there wasn't as serious inflation scare as there is now. There wasn't a serious consumer index scare as there is now. There wasn't even a Russian-Ukrainian war as there is now. And we used the Chinese stocks, the China 50 index chart, charts like Alibaba on this channel last year, and I told you that a stock market crash is coming. My videos are well labeled. I saw this coming up. Now, all of a sudden, you know, the Buffetts and the Charlie Changs are talking about trying to find the bottoms, right, of these markets. They want to start buying these markets up a little bit and start to dollar cost average. Though I still believe there's still more pain to come to the Chinese market. Right now, Hong Kong in an all-out combat, there is a new COVID virus. Queen, war, new COVID virus. Moving on, America, not important. I'm just scanning this stuff here. NATO chief, Russia could invade Ukraine without any warning. How do you think markets are going to open on Monday? That doesn't sound like good news. Here's Bill Gates, who's predicted 4 or 5 viruses because this man reads at least 3 or 4 books, and he surrounds himself with more people who read more books, and they do what's called the mastermind network that Napoleon Hill talks about. Check out my podcast because that's literally what we're talking about. People say Bill Gates knows about these viruses because he's creating them. Yes, man. Guys, being poor is terrible. Eh? Some of the ideas that cloud our minds are absolutely ridiculous. Now, if this man is right based on his resources, not because he's a genius, but because he's well researched, and he says, Gates says COVID risks have dramatically reduced, but another pandemic is coming. Oh my goodness. What's the sentiment? You get what I'm saying? This exercise is important for traders. Right. I'm going to stop here with CNBC. We can look at, at the stocks, all red, right? So US market for me is normally a good read. My Russell is down, right, by 93%. The NASDAQ is down, right? SP 500 is down. Dow has just suffered a lot. Our fear gauge index is out of control. Biden convenes National Security Council on the Ukraine crisis. By the way, America is very much invested in a war with Russia, very much invested in a war with Russia. And everybody, by the way, right now as well, I don't know if we'll see it on Forex Live, just the final stuff about this. All European countries agree that Russia is being silly, but they disagree on the punishment. Nobody wants wars, but America is like, let's do sanctions. Nobody wants sanctions because if we do sanctions on Russia, what are you going to sanction? Let's see. Oh, okay, that's right. You're going to have to sanction energy. Energy sanctions, Italy said no. France said no. Euro said no. Don't mess around with energy crisis because once you do, this is what your oil chart looks like. When I use my Akini Hashi candlesticks, this is oil. This is the spring of oil since the negatives in 2020. Pause. Impulse, pause, impulse, pause, impulse, pause. And so we're due for a pause right now, but at some point, we gotta reach the supply at $100. And no European country is ready for sanctioning the second largest petroleum user and a massive oil tycoon like Russia into energy sanctions because it will create inflation across the Eurozone. But it's also a bit useless because if we get to $100 a barrel, we're going to have a recession, right? So we're all screwed either way, right? But anyways, enough about that. So widespread fear. This is yesterday, Saturday. So the latest reports I remember reading these last night, so I don't know if there's any use to them, but because when you're here, look, border, Ukraine, there was tension yesterday, fighting reported. Johnson says allies must push Russia if Ukraine so much is damaged further, right? Bit Biden, US has reason to think Putin has already made his mind. I mean, America is driving his own propaganda, just so we're all aware. Now, will this be about government-controlled Ukraine? You see, it's markets can't escape risk of Russian attack. Don't buy NASDAQ on Monday. It's 4:30, that volatility group, someone's going to be there asking you to buy that thing. Be careful, right? The sentiment changes quickly and it messes up intraday traders. It might not mess up a big impact on long-term trades, but nothing. Large explosion. This was on Friday, right? So guys, you get the picture. You get the picture. Markets are gloomy. Markets are not sure. We are not sure about what to do. Now, I will comment a bit on this stuff, COT, legacy stuff, all that kind of stuff during the week when I'm done, right? So I will use the better part of tomorrow to kind of like finish the stuff. But from the stuff, from the data I've looked at, and I've looked at very little, right? This is Tuesday, COT on Tuesday. Yeah, we're now looking at the latest COT data on Tuesday. I'm going to do a quick exercise with you just to see the flow of money. Despite every news that you've seen, every news article, everything that you saw happen in the market, let's follow the money. That's the important thing. Now it's very important. Once again, you understand, markets are not moved by our desires and what our mentors tell us, including Leroy. Markets are moved by money. Money talks. So 15th was this past Tuesday. DXY, 42,349 longs, 6,963 shorts. And you'd be like, oh my God, that's different from last week, Leroy. Last week, we had 40,730 longs. This week, we're at 42. Leroy, they added more longs. Dollar is bullish. Well, let's look at the data a little bit more carefully. The shorts are 6605 from the other week, and this past Tuesday, the shorts have also increased to 6963. If you still can't see what's happening, let's look at the total orders. In total, both longs and shorts, there were 49,312 orders, and the week before that, 46. So the orders went up by 3,000, a little bit to buy, a little bit to sell. The percentage is what I love as a good indicator to keep you on your feet. If you look at the 15th, at the end of the day, the longs are 85.9% and the shorts are 14.1%. But if you look at the previous week on the 8th of February, the longs are 85.9% and the shorts are 14.1%. What does it mean? It means markets balance themselves out. Nothing changed. Let's go to the DXY chart. Armed with this information, you will see that all that happened, the markets have been using the bearish engulfing pattern on the weekly time frame to take profits. This is a take profit time for dollar bulls who bought a long time ago. Markets are taking profits. You guys will remember, and let me not say remember, let me advertise it. I am now doing market open live sessions every day at 8:30 on the YouTube channel for exactly 30 minutes. And if you remember, on Thursday, when I did these sessions with you guys on the 1 hour time frame, I drew a trend line for you, and I said price is most likely going to break structure here, because people were like worried, like I didn't think this, because when this shot up, pound USD fell on Friday, right? But this structure was lining up. Now, this H4 demand on the dollar index is very weak. We spoke about it. Look at this. They put this in there, bearish engulfing pattern. I mean, it was doomsday. In fact, I myself believed, hey, Dr. Francis, good to see you, man. Good to see you. Good to see you. Dr. Francis, I saw you like in a picture. Are you in Joburg, or were you in Joburg? Are you based in Joburg now? Let me know, man. Just to catch up. But I think I did see a picture of you on some Word of Life page. Right. So look at this. The H4 demand was broken. Not broken. It was very weak. There was a counter supply. Remember, to take out an area of value, it is nicer if they use an opposing area of value. Yours truly believed that this demand was going to be taken out. I absolutely believed it. But just like the Bitcoin chart that I told you, this is not our money. FOMC, right, decided to add a bandage here. So I'm going to play this back for you nice and slowly so you see it. So they added money quickly to save this area of value. Remember, guys, our rules are for how we trade. 365 traders, especially you. I mean, I know there are some people who haven't joined the academy, so they don't know the rules. But the rules here in module 1, the week 1, I just want to make sure I'm right. Major turning points. All right, so from week 2, those of you that access the course, I'm talking about, man, look what I'm doing. I'm talking about module 1 from week 2. Those are rules for us as traders, right? These areas of value. There we go. This stuff here. This is rules for us. It is not the rules of how the market is always going to operate. So the markets have every right to put a bandage on an area of value. The markets have every right to weaken an area of value, create glass effect, and still go up. It's the market. It's theirs. Our rules are based on making sure we only take the most primary, safest, risk to reward trades. So when we see glass effect, we move on. We don't care about that area of value. We go find something else to do in the markets. Then we come back to review the tape to see what the markets decided. During the morning sessions that I'm referring to you about on the H1 time frame, if you drill down, clean multiple time frame analysis, it almost became clear that there was either going to be a trap, right? That the trap was they're going to act like they're going up and they won't go up. I was leaning more towards the downside because the H4 was weak, bearish engulfing on the weekly, etc., etc. But on the 1 hour time frame, they exploded upwards, right? And that's fundamentally important to kind of like just stay cognizant of, right? All the time. The rules are for us to trade safely, but at the end of the day, markets are allowed to do whatever it is that they want to do, right? Absolutely important to remember that stuff. The rules are for how you trade, right? Not how we control the markets, because we don't control the markets. We can predict the markets based on that kind of stuff, right? So long story short, somewhere here on the 14th of February, was a beautiful moment to take profit, and price was has been taking profit, and I say that with confidence because you can see nothing has changed in terms of the dollar, right? AUD USD, we spoke about how weak the AUD was. We spoke about that this just needs to drop. Last time we spoke about it, the previous forum, they were 85% shorts. This time they've moved into 89% short. So they're getting there. You guys, when you do the trading psychology course, you'll be so shocked. I'll be teaching that stuff with mostly zero charts, but it'll be very much linked to charts. And you can see this is that 15-minute supply that I told every single human being about on the public Telegram group for free. And I said, look, man, there's a 1 hour supply there. It is no longer safe. All that stuff is there in the public Telegram group. You can check for yourselves. And I said somewhere in here is a 15-minute supply. Markets are going to play there. There was a nice short intraday trade. It turned out to be a slightly long-term swing trade. There was a little bit of hunting, but I honestly got in here, got out there when I made the announcement on the public group, and my trading strategy would not have allowed me to sell again here. So I was not involved in any of these short-term trades, but you can see AUD USD is now in its way to creating what we call lower lows, right? Lower lows is market structure communicating its desires, right? Price is starting to slowly but surely head down. It would be nice, I don't want to lie, it would be nice if markets were to go back a little bit up. Personally, I still feel like there is conviction. The reason why I'm bringing trading psychology up is because there is something called mass liquidation, right? It's not the type of technical analysis liquidation that is spoken about. It is psychological liquidation. It is about conviction. If you read any of the books I referred to you, you'd learn much more quicker, because then if everything waits for Leroy, I promise you, I have so much to give and say, but time is not always on my side. Now, if I'm smart money, I will always know that I want to sell AUD USD up there. I would know this because I'm well connected. I am smart money, but more importantly, because I can. My boy yesterday asked me, why do I have to go to sleep at 8 p.m.? It's a Saturday. I said, well, because it's good for you, blah, 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 blah. It's healthy, it's for your mind. And then he had another follow-up question as to why. And he kept asking me why. After 10 beautiful, soft, gentle parenting answers that I gave him as to why he must go to sleep early and not stay up at night with the adults to watch movies. I finally told him, because I said so. When daddy says because he says so, daddy is now tired. He's given you all the answers in the world. It's now just time to do what I want you to do. Smart money operates like that. If smart money decides to sell up there, it will sell up there. Now, let's say there is a high sell point right there. And let's say there's a lot of fundamental news that suggests that the sell will happen here. You remember Henry Barnes in the book Currencies, Adventure Currencies of a Trader by Rob Booker. He was looking at a Euro USD sell and he wanted to do the exact same thing. And his mentor told him, just wait. The reason why you always wait for the higher sell opportunity is because smart money knows retail traders cannot do that. You are literally, it's literally, I don't know, it's more than a blueprint. Because of how fast markets move and what they represent, your mind, if it comes from a scarcity mentality, wants the now immediately. And markets know that. So in this level, you'll have fundamentals. How many times, for those of you who followed me this week, did we not see the sentiment change on and off, on and off? How many times did we see this week alone a headline that said AUD is the strongest? AUD is the strongest because job numbers were good. Number one, AUD was the strongest because at some point in time, Ukraine was pulling good signs. Russia was pulling out. The war was over, blah, 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 blah. And yet, at the end of the day, the sentiments change the next day or the next hour. You will also have technical analysis here. Technical analysis really referring to every single Jack and Jill technical trader, retail trader, right? So retail traders looking for support, resistance, etc. Now, this is it. Then you come to our brothers and sisters who do a trading strategy called ICT and BMT, who like to talk about liquidations as if it's the end be all of the market, and that's perfectly fine. If it works for them, it works for them. So this is what the markets do all the time. Now, me and you, if we're not smart, if we're just simple retail traders, we will want to take the closest sale. We will want to jump on the latest sentiment. We will want to take the closest supply. We will want to take the closest resistance. And what that does is all of us will have our stop losses anywhere in this region. This is the liquidity grab. Liquidity meaning your money. Your money is free money in the markets. And all it takes, now this is the part that trips people over. And I'm talking about professionals. I mean, in about 2 weeks' time, I'll be visiting an oil company in South Africa, a very big company in South Africa, to sit down with their traders for just a weekend, just to refresh where we left off last week and to assess how they've been trading since the year started. All right, and then I'll build a workshop around that for them. But all the time, these are professionals. They've been doing this, some of them slightly longer than I've been alive, slightly longer than I've been alive. And they fall for the same traps all the time because they don't grasp this. It takes one, guys, pay attention. If you do the module 4, we're going to make sure the module 4 trading psychology course is available to everyone. You don't have to do module 1 or 2 or 3 because trading psychology, I don't care about your strategy, you need it. It takes one smart money trader, one smart money banker, one individual in Wall Street, one company, one hedge fund, one bank to decide how far to push price up. All they have to do is to have the absolute conviction to do so. And if they do, they simply need to back it up. Wall Street, obviously, the wolves of Wall Street, the term comes from the fact that Wall Street operates like a pack. So there are pack agreements all the time about price, but sometimes those pack agreements are driven higher. The more there is fear in the market, the more there is volatility. The more there is volatility, the smart and patient lurking in the dark know how to time perfect opportunity. You are that opportunity. It takes one smart money trader to push price here. All of us have now been triggered, and to push price a little bit here and to take all of us out. When they take all of us out, retail traders, because they don't know how to cool off, start to open buy positions. Why? Because they get that Sometimes you win in trading, sometimes you lose in trading. And most retail traders believe you lose trades based on direction. So they start to buy. When they start to buy, what are you doing? You are helping smart money down here who is already pushing price up to a specific direction conviction. I'm talking like this because I saw some of the questions I got in the public Telegram group this week. Right now, I bought here smart money. So obviously, if you start buying here after I've liquidated you from selling, you are helping me. You are adding more profits to me up until you get re-liquidated again when I get to my final sell. So this long introduction of today's war room is to say, until bombs and there's a declaration of war, and I actually feel like it's going to shape the general sense of markets, I think it's very prudent me and you keep doing what it is we are supposed to do, which is to only locate supply and demand levels, because those levels are the ones with the most money. Those levels predetermine most of this war tension. And if you think about it, if a war happens, it's going to be risk off. If you think about all our trades, all our pending orders, they are all risk off. We want to sell AUDUSD, risk off. We want to sell EURUSD, risk off. Pound USD, risk off. We want to sell all these things. So in the meantime, in the betweens, when the sentiment changes to good news and pound USD starts going up, it is not a signal for us to abandon our trade idea. Let them bring price up to us. We still want to sell, right? So this is pound USD trade. And after this, guys, I do apologize for taking time, but I felt like, my goodness, an explanation is needed, right? I actually didn't make a lot of money this week. I took very few short-term trades. I did not put in long-term pin-in orders because I really wanted to see whether this war was going to play out. And now I honestly just couldn't be bothered. They've dragged it for too long. I hope there isn't a war. This is a pound USD trade chart. Sorry. Price made a point here. We had a fresh touch. Then we spoke about this. We spoke about how price was going to come back here. This is first of all on the weekly time frame, just so everyone is very clear. We spoke about all this kind of stuff. Then markets slowly but surely did not make a retest, right? So we know what that means for us. It means there's still hope. There's still upward mobility. Price might still actually want to go a little bit higher to make contact somewhere up there. So we are waiting. If you go to the daily time frame, we want to sell any type of sell. You see this beautiful sell there? This is from the morning live sessions I'm talking about, right? This is literally a 15-minute supply inside a day. And the reason for that was everything on Friday morning when I did that London session for you. It's for the London session, not the New York session. Everything was screaming buy. There was a beautiful trend line. There was all these little traps that looked like a beautiful buy would work. Honestly, it was well sold. The only thing that would save a 365 trader was to remember that you never do anything that opposes an area of value. If we're inside a daily supply, we don't buy. We don't buy. It doesn't matter if the president tells you to buy. We are not going to buy. What you will note to see, if you go to the 15 minutes time frame and you go to just before the London session on Monday, if you can come, you see my live sessions are 8:30 to 9 a.m. This is what we had on this chart. I mean, this chart for me is probably the best teacher for what I'm trying to tell you. So when I was looking at this thing, with those of you who attended the live session, I said, well, this looks interesting. We could potentially get a break of market structure and we'd get a demand and price could explode to the upside. We could get a retest. And if we get a retest, you can take it, but make sure you get out somewhere up there. But don't forget, it is dangerous, absolutely dangerous to buy inside a daily supply. And I literally just focused on this. If you look left on this chart, as we were analyzing, there was a beautiful fresh peak supply. See this peak supply? Absolutely gorgeous. I mean, just look at it. Look at the rally. Look at the price point. Look at how sharp the peak is. You can draw a peak man, peak lady. Depends how I taught it to you, whenever I taught it to you. And then you had a fresh touch of that peak supply, and price didn't even bother to leave the daily supply. You guys want to learn intraday trading. You guys want module 3. These are the type of decisions you have to make all the time. But it also means you have to be absolutely brutally committed to your charts, because intraday trading requires mass focus. If you look very carefully, that same morning during the London session, price ran beautifully, gave a lot of people hope that the pound bulls were there. But this is it, conviction. Smart money will use an entire session, waste everybody's time to pump price up to an area of value that precedes you, that happened long time ago, where all the money was stacked in on the 10th of February at 6:45 p.m., where we know a real module 2, there's a module 2 supply. It's in the course, module 2 supply. It's simple as that. And now the risk to reward ratio about the small time frames is what is the most attractive to me. Price literally dropped to 1:5 before I got out of this trade. Why? Because supply got engaged, and I didn't think, oh my God, the trend is bullish, let me buy. I didn't see it like that. I saw it as, oh my gosh, retail traders have really entered, let me sell, because smart money is going to sell. Because while the daily supply for a swing trade, glass effect is real, I get that 100%. For a short-term intraday trade, this is nothing but a retest. The daily supply is weak, but not yet broken. The rules, guys, not yet broken. Therefore, we make money. If you took profit here, that's 1:3. If you didn't take profit, like me, purely because I was in therapy. On Fridays, I have my therapy sessions every Friday between about 3, unless if I go to golf, whatever. But normally 3 to 4, I'm in therapy. So I wasn't there to take profits. So when I came back from therapy, I was happy because my money was part of the money that took out this demand. And then markets were about to close, or I was about to log off my computer around about 6-7 p.m. I took profits, case closed. It's a simple trade idea with the basic rules imploded. This to me doesn't indicate that pound USD is strong on the upside. It doesn't also indicate that maybe I should have not closed this trade and turned it into a swing trade. The only reason why I didn't do that is because fundamentally the area of value is weak. I mean, how far can price go? So signal number 1 for pound USD, because like I said, I would like to go through a lot of the stuff we've done before to reaffirm our pending orders, because I'll be adding them this week. I didn't do so this past week, waiting for war, and now I'm starting to feel like I'm gonna wait forever. I feel like markets have just been filming Cartoon Networks, and we are the Popeyes. I have been a Popeye this week, right? So my anticipation is it'll be very much nice, just like that 15-minute setup, to get tagged somewhere in here. All right, I'll be looking for a deeper push into this area of value, a deeper push into here. If I take that, then I'm gonna run. I'm gonna run and see how price enters here. If there is a little bit of friction on the H4, H1, I'm gonna be patient. I'm going to let price dance, because this could be a strong turning point on a smaller time frame. I'm going to look for the 61.8% retracement area, which will be somewhere here. And then I'm not going to do nothing to my trade. I might just break even in case I'm wrong, so I don't take a loss. I'm not going to lock profits. I'm not going to trail. I'm not going to be desperate to lock in $20 or whatever it is, $200, whatever your lot size is. I'm going to let markets flow. And if I'm right about markets flowing, then I'm going to really see the downside action that I want to see. I must warn you, be very careful about the fact that we do have a supply above the supply I am looking at. We have this supply here that was tagged sometimes, like 1 or 2 times. And so even this supply requires a touch. And what happens in most of these type of cases is you end up getting the body closing here, and the long wick making contact, tagging all the cells there, and then going down. And what happens to that is we might get stopped out there. And I'm happy to accept that, only because I don't want to have a trade on a daily. For a swing trade, it'll cost me a lot of money if I have a supply that covers both trades like this. It'll cost me a lot of money. And for this trade to be worth it, I'll have to hold it for a very long time. Because I'm very good with my risk to reward, and I risk according to my capital, and I'm okay with losing money in the market as long as I average out in a series of clusters, I would far much more rather have a second sell order here that allows me to only operationalize, right, the appropriate risk and still have the similar take profit targets. That is to say, go little risk here, go little risk there. If they take me out here because they want to tag that, the profits going down will make up for that take me out. Just to be very clear, if they take me out here, they're taking me out for about, you know, give or take 11 pips, right? Or no, sorry, 118 pips, 118 pips. But if they tag me up there, by the time price covers the distance between my entry point and this previous entry point, that alone is 184 pips versus the 118 pips I lost. So I am already in profit and I still get the run going on, right? So I'd rather have 2 sell orders on pound USD there. So I hope that's clear. I hope my logic is clear. AUD USD, I just taught on it. I didn't give a signal. So I'm done teaching for the night. Time is money, right? So price is breaking down quite, you'll see, right? There's a lot of pressure for this thing. Or 89%, guys, you know my indicator is very strong bias, right? I have seen things get to like 95, 92%, but it will take conviction. It will honestly take smart money conviction. And the chart to find, the chart to mirror all of this stuff with pound USD, Euro USD, AUD USD is DXY. You almost need to anticipate continuously the changing of hands, right? So on my, okay, it's my left. I don't know what it is to you, but here, where there's a circle, this is AUD USD, where I just put that yellow circle, right? AUD, this is the AUD chart. I'm just going to write A. And here is the dollar chart. This is the DXY. I'm going to put AUD on the daily time frame, right? I'm going to put AUD USD right here on the daily time frame. Then I'm going to put the DXY chart right here also on the daily time frame. And then I'm going to delete all these ugly things that I put here on the dollar, because you will know price is about to reverse based on the supplies and demands that this asset is about to hit. Okay, I never predict price because I'm a magician. I am not a magician. I appreciate the compliments about the course and the feedback. I thank you so much for those of you who are learning and enjoying from it. But I also want to be very clear. It's not because I'm the smart guy, right? It's just me literally telling you exactly what I see in price and following supply and demand. I don't like, where's my DXY with all my other lines and my trend line and all that kind of stuff. All right, fine. I can't find that chart right now. All right, fine. I'll just use the one that price has given me, and then maybe it doesn't show you. Split the screen, right? Anyways, so on the DXY, for example, on the daily time frame, you guys, this is the daily time frame, right? On dollar and on AUD is the daily time frame. It seems to me that on Monday, Tuesday, although I think Monday is a banking holiday for a country, this is not a bearish engulfing pattern, so I don't care about that. Right there is not a bearish engulfing pattern. Price is not giving me a bearish engulfing pattern, so I'm not interested. I don't think this means anything significant in my life. So let's say I am right that markets are going to push to the upside. I know on the weekly we're bearish and all that stuff. We'll talk about that later. But let's say this is the target, short-term target for DXY swings. It means there has to be a short-term target somewhere here for AUD sellers. So let's say the target is there. Why would these targets be opposite? Because if dollar is strong, AUD is weak. And when AUD gets a little bit of strength, it'll have to arrive at a demand. And by the time that happens, dollar would have to have arrived at a supply. And then you'll get change of hands, right? Money will kind of like change hands a little bit. So those could be potential price targets to look out for the week. I am not entirely convinced, or at least not to the point where I'm now ready to take a long-term trade on AUD USD. One, I would have loved to have not closed any of my 15-minute supply trades, but unfortunately those areas were tagged. Two, price already broke those areas anyways. Three, if I draw this area correctly on the daily time frame, it looks like this. It looks like we're a fresh touch, and now we're in the middle of a retest. The reason why I liked that 15 minutes tag was because of how embedded it was. There was a lot of confluence. So we could get price moving down. Number one to here, which would be a very ugly demand, right? Not really a textbook supply and demand the way we teach it. But we could get that, and we could get price breaking market structure somewhere here and coming to tag this demand all the way there. All right, if that's the case, I will pretty much want to join. I mean, I do want to join it, but I don't trust. But I'll have to find like an H4, H1 area, to just really regroup with price and then move on. If I open AUD USD on the H4 time frame, I'm going to do the exact same thing here on the dollar. This is confluence on a different level. You want to make sure you absolutely understand your asset. And I'm going to give the dollar Hakini Hashi candlestick so that I'm not too confused with all the other information they're giving me, right? So there we go there. So I've got somewhat of a pickish supply. It's not the best, not the greatest, not the clearest, somewhere up there. So remember, our daily target was far away because on the daily time frame, I told you guys there was not a bearish engulfing candle. Remember that this was not a bearish engulfing candle, so I didn't care. But now on the H4 time frame, a smaller area of supply on the dollar, I'm finding places where price turned, where an imbalance might have struck, where price had massive rejections, number one. Finally find that interesting. A smaller nyana gap, number two, a retest of that. So price could, after filling market inefficiencies here, make contact with this supply, and then we get another dramatic drop in the dollar, which will confuse risk sentiments. When I look at AUD on the H4, I struggle. I don't see anything there to catch it, nothing to catch it, which makes me believe markets do want to go up here. This was taken out. Okay, then there was a PCP with a very poor imbalance, which we wouldn't even consider to be a demand. It was tagged quite deeply. 50% was already removed. So there's not a lot of money in that order block. And so maybe you get something silly like this on the H4 time frame, which I already told you is a very weak demand on the daily. As far as I know, that area by the end of the week could be completely removed. So watch out for a slump in AUD. But in terms of where Leroy is going to trade, to be honest with you, I'll take short-term trades, 1 hour H4, take profits, etc. But if I'm going to take a swing trade to hold, I need price to come here. I do. I honestly do. None of my true sells, pound USD, Euro USD, AUD USD, none of this is my money maker. Like I'll take if I'm doing those morning sessions and I see an opportunity, a 15-minute inside an H1, inside an H4, and I think it's good, I'll take it. But for my swing trades, I want to make money up here, right? I want to really make money up here because this is clean, it's beautiful, it's perfect, it's in line with a lot of things. It's the only Akinahashi order block that we can see. It probably deserves to be loved, right? So AUD USD down. Then we looked at pound JPY in the past. I'm doing this, guys. You please feel free. By the way, today I started an hour late. My partner's got another big charity event this coming weekend. She's just, a lot of things are going on. Then she's got a children's, no, not a children's, a power of play for parents on Saturday, Friday, a charity event. So she's a bit busy, and I need to support her. But for the most part, if you feel like I've gone over time tonight, feel free to leave. But if I don't do this today, I don't know what my week looks like. So I must spend as much time as I can here. Right. So pound JPY, if you remember, man, I told you guys I have a love-hate relationship with this chart right now. It has not been kind to me. So I finally marked out 2 places to operate: the perfect sell and the perfect buy. As far as I can tell, price has been pushing up, which is correct, but price has finally pushed up into a supply. The problem with this particular governing supply, and to be very honest with you, the governing supply is much bigger than I've portrayed. It's like this, is that markets are not yet, and the governor time frame is slow. Markets are not yet behaving like a governor is in charge, right? Markets are like, yeah, we made contact here. Don't forget this, right? Because remember, the governing supply ended up becoming a bearish engulfment. Before that, it was a Talitha area. If you've done the course, you'll know what I'm referring to. Before that, it was a PCP, and so the touches mattered. But after this big candle on the 16th or on 2016, it became a strong and bearish engulfment, which allowed it to have more power. So this fresh touch, which was not only just a fresh touch, but additional sells were put, as we can see in the supply created in 2018, has been fantastic channel that pushed price down. Then came COVID, the March whole thing. Markets have broken up to the upside, and now prices here. There's a downward trend line that is quite historical, that is holding price down. Part of me believes that pound JPY will soon fall. Another part of me believes that I am too emotionally negatively invested in this currency, because it is the only one out of all currencies in 2021 that I lost money to at least 4 to 5 times, quite consistently. The other 2 times I broke even, but I strongly remember 507 loss on pound JPY at some trade last year. I remember a $300 and something loss. I remember being up $800 and being completely broken even as well. So I don't know if mentally I've made sense or peace with that, right, with this chart. So I might be seeing a revenge setup, and I don't want to see a revenge setup. So I'm not the best judge for pound JPY. If I could be fully honest with you, I will be after a market cycle happens. I need price to break the supply. I need clarity in decision that doesn't influence me. But when we did an MTA, a multiple time frame analysis, we agreed if I could remove this big monthly supply, that there was a weekly supply up there, right? That really already had been tagged, right? Price was quite desperate to really go down. So it tagged it, took some sell orders, but it's a bearish engulfing. So we appreciate that about it. We trust it. We know it will do its job. And then I say to you, look, man, it hasn't made contact. So the next time I'll ever sell this thing, because every time I sell, I'll get cut up, is somewhere in there. Markets have not actually come back to the cause, right? It's almost like when Eve ate the apple, then took the apple, and then Adam, had to go have the big meeting with God. Price has not come back to the city of reckoning, right? It hasn't come back to the supply that caused everything. Until then, I'm chilled. So I don't care to sell. But I told you guys that if price does come back down here, I'll be very, very happy to buy. It would not bother me to risk money, even if I'm wrong, right? It would not bother me to risk money and probably hold the buy now, because look at this. The supplies that price made on the weekly are getting weaker and weaker. On the daily time frame, it looks like this. So this to me looks like glass effect. You could, cowboys, hee-haw, get on your horse. You could sell all the way there. I don't know. I'm really not co-signing that with you. I am not taking the trade. It's a good possibility, right? Cowboys with stronger, good horses, you could buy here. This could be a very good place to buy. All right. In fact, I have no quorum with that buy. The only reason why I am not excited, okay, that buy is going to work. The only reason why I'm not excited about the buy is fundamentally because there's a lower buy. And I'm a lower buy kind of guy. I'm a patient kind of guy. But if I draw a bullish Fibonacci, just using the leg or the phase of the market on the daily time frame, you can see that this is very much within the 50 to 60% range, right? So this was a sell. They used a supply to take profits because it's a retracement. I hope you guys, I need to upload all my public lectures. One day, please don't be surprised if you get a notification from YouTube that they're all my public lectures that I did for free on Fibonacci, what it means, market sentiment, market correction. I'm just going to throw them out there on YouTube. But if I want to know that it's a downtrend, I need a market reversal. That means this supply has to send price to a demand, an opposing demand. A peak supply's opposer is a value-based demand. That's golden basic wisdom. But if I get a supply being pushed to a retracement, who's retracing? The buyers. This is a buyer's retracement. The buyers are buying low again. I am even more convinced that price is still bullish until it gets up here. Because if the sellers were truly in charge, they would have pushed price down. But instead, it was the buyers who were smart enough to buy down here who are now taking profit there. When you take profit, price naturally drops. When price drops to an acceptable discount, 50%, 61.8% acceptable discount, markets buy back. And that's what's happened so far. So if price was to come back here again, I'm going to be like, would we really get 2 discounts on an asset? Probably not. Probably so. I don't know. I will avoid acting here and wait for that, right? For technical retail traders, you'll hear them talking about an M-shaped formation. You hear them talking about a W-shaped formation, a double bottom, all those things. I'm here to tell you exactly how those things come about. Those technical stuff run with money. So I would want a full leg there. If I was to be a cowboy and sell there, I would go through the motions and not take profit until price comes down there. because that's more risky and unpredictable if price will make it down there. Tomorrow, Monday, I'll be setting my pin in order to buy here, and I can guarantee you setting my pin in order to sell. Just a quick warning, by the way, about my war rooms. This is all market speculation. The war rooms are designed for 365 students because they've got the entire course and the tools. If the sentiment changes, given the tools you have from the course, your mind as a trader must change, right? You can't just say, I'm going to wait for Leroy and Sana to tell me if it's right or wrong. If markets change, and I see that markets are changing, for my account, I'm going to move on stuff, right? The pending order ones, the stuff on the master spreadsheet, those I won't touch, right? Because so we can see the power of cluster trading. But for my in and out trades, if the market sentiment trades, I'm going to reanalyze the markets, given the tools that I have to make sense of the markets. Is the mayoral time frame shifting? Is price from the mayor moving from demand to supply and not supply to demand? Because that could affect my charts on the daily, right? So this is where the true supply is on the daily. So that's where I'm going to set a new pending swing trade pending order for a sell. Pound JPY. I'm going to try for here in 2022. It'll be my first pound JPY trade of the year because things have been terrible, right? So then I'll sell somewhere down there. What could happen, by the way, looking at this chart, is instead of price coming all the way down there to trigger me into a buy, is markets could continue, quickly turn somewhere here. I'll show you now, and then make their way first to go sell. Right, and if they do that, then I'm looking at a target like there to buy that back. So for example, when we pulled the Fibonacci, we're looking at a swing low, swing high. I'm taking so long on charts today. This is another new swing low, swing high. This is to say price could do something like this, 38, something percent PCP retracement and push to the upside. Since anyways, it's a buyer's market. Since anyways, you want to create a low, but you also want to maintain a higher low and not invalidate this higher low, right? So that's a play. That's why, once again, all these scenarios are for me to convince you, don't be a cowboy, don't try and sell right now, unless you know what you're doing on the smaller time frames, right? But if that's the case and price stops somewhere here to push up, then I'll meet it here to sell. And when I sell, the only demand I will be worried about is this one, but I really would have my eyes focused all the way down there. So pound JPY, I need to add this to our pending list. And as on Mondays, I have to sit through these things and rethink them. EURJPY. I'm doing this despite the fact that I don't know if there's going to be a war. Oh, yeah, okay. So this one we're clear. You see, isn't it nice when you do a war room after war room, all of a sudden you bump into one of your analysis charts and they're going well, and then you remember, yeah, this makes sense. We're making money here. And this is one of the trades I was not triggered in personally. When I say making money, I say I was right about the analysis, but I'm not in this trade. This was what was part of the setups that one of our students asked us to look at a lot of euro pairs, and we analyzed this in the war rooms. Then I got damn busy that Monday, didn't get around to setting pending orders. I don't just sit on charts, guys, and just watch charts all day, every day, right? In fact, if anything, I'm trying to modify my life to do the opposite. I want to find a way, as much as I can, at least by next year, to be more productive in terms of making money quarter by quarter, yet spending a quarter of my day reading. I want to study more. I want to know more. I'm fine with where I am with money and my level of knowledge, but I want to spend. Warren Buffett, if I really am going to get my hedge fund where it needs to be, that man spends the first 7 hours of his business time studying, reading. All right, there's a reason for that. A man must read, and a woman, human beings must read a lot, right? So I did map this out for you, but I did not set the pending orders. Therefore, I am not in the trade. But you can see the analysis is playing off very well. This is beautiful. If you're in this due to simple fact that you're 10 war rooms and you look at charts, don't be lazy. Don't wait for Leroy's spreadsheet. Apply the course. You have all the keys. Right, so this is some clean money that is right in front of you. A safer exit would be here, but it might not hold, and it doesn't look like it will hold. If not, then you're looking at the white line. You're looking at the fact that price did create a wall here. So feel free to take profit there. Feel free to take profit, just above this new rectangle, right? I think that might be a very good place for price to finally arrive at. But yeah, this has been a beautiful, beautiful, clean trade, and we had multiple opportunities, those of you who like, look at this. Then after price came and what, look at this. Price still came back for a fresh start. And you'd know this is going to happen before it happens if you've done the course. You know that any engulfment requires price to double confirm and drain it. It needs a drain. You would know that those drains happen in two phases, right? So you've got a fresh touch there. So look out for that. Look out for a potential drain before price makes it here. Look at your H4 time frame. Start to draw some synergy, right? So on H4, you want to find a good supply on H4. There is a supply there. This is embedded in the daily. That's the one that price came back to on the daily. The one that I just said, that price comes back that day. That's that area there on the daily. You see that there? Strong candlestick coming back to trigger an H4. So if you missed that big supply and you missed the second supply, you could be in this trade. I really want you guys to see, because I feel like some people just don't get how impactful some of these war rooms can be, right? So this is the third time you could have been in EURUSD. This is the third time. And already, if you entered late and last, but just based on the principles of supply and demand, this is also a 1:3 type of trade currently operating, right? And so you start to think about your legs. You want to make sure that markets are doing the right thing, obeying structure. You want to diagnose your charts. I hope you guys can see my fibs. I decided to do away with the lines, but just maybe for the war room today, I'll give you back the lines so you can see everything. You can see that this was a golden ratio touch. You can see that's the one you never want to miss. That's the one you take to your mama and your papa and you pay lobola and the bridal price for. You get married to trade setups like this. It's done. Right. And then as price was moving, remember, while we like to see the ladder down, while we like to see price move down and create a ladder down, you could have it like that. You could have it like that. We should never forget the fact that the lower price brings us down in a downtrend, right? Number one, the weaker the momentum to the downside. Now, if you look left, you can see that there's a lot of buying that we need to fill. Right, all of this, right? The reason why we can sell non-stop is because we need to extinguish all these buyers. But when we start to look at the smaller H4 timeframes, things become a little bit tricky. So you might want to exit there. But if you exited there and you took the latest sell on EURJPY, which by the way happened 2 days after Valentine's this week, then you're still in money. You're still in serious money, man. You're literally in line to make about 1:5. It's absolutely perfect. The reason why I do this stuff on the daily is because I give you that good direction. If you are in the academy and you've got the course, you go make your money. But you'll never lose money because you didn't know whether the price was going up or down, because Leroy was very clear about this. So this sell has happened. So these are the trades I've missed. I've missed 1, 2, 3, 4, 5, 6 entries because I was busy doing other things. This week I was trading a whole lot of crypto because the first week when I told you guys Bitcoin was going to go down, I was not in. The second week I didn't do anything. The third week I was like, never. I'm selling my, trading, not selling my coins. I'm opening sell trades, right? And I did a little bit of crypto trading, sold quite a bit this week as well. And maybe this week I'll be focused there as well, while I wait for my currency pending orders to happen. But now we've got this doji candle here, right? So we've got a turning point. We've got a demand that was taken out right here. That's nice, right? That's a good sign. So one could, as a bottom feeder, as someone who's now eating leftovers in the markets, one could wait for stringent confirmation. For example, they've taken out this demand. What you want to see, I assume, is you want to be very careful. You would want them to, first of all, break market structure. So go below this first and then come back. And when they're coming back for as a retracement, you want to be very careful how you play it. There is an urgency. Whatever feels urgent in the market, every time you feel like scratching yourself and going, I need to do this ASAP, right? Probably do the opposite, right? Just probably slow down. there'll be an urge to take the sell from there after price has broken market structure. If you're coming for leftovers, I hardly trade leftovers because I'm trading with retail traders. The imbalances have happened. The imbalances are on the extremes, right? This has already happened. This is now trading within a box, within a range. You see this here? Everybody's invited to this party. Every single human being on the planet of trading, all of this trading activity, this is a box, this is a range market, right? You get the up, you get the down, you get the up, you get the down. You see that there? It's a simple supply, support and resistance range in market. I never trade in those type of things. But if you're a smart cowboy and you know how to giddy up correctly, I would avoid trap number one of trying to sell here and rather, set up a situation where I take a risky sell, okay? Maybe plaster it something. I just want to see if it's even worth it. You'll get a 1:2. All right, so I would go H1. Oh, that's beautiful. See on the H1 there? Look what they did. That's pretty. Right, so I would go H1 like that and then come back H4. So H4, I want to watch my back. I want to make sure that, the stop loss hunts and all those things don't find me. So I'm going to have a nice stop loss. Then I'm going to reduce my entry points to something like that, area of competition. So on H1, on the H1 time frame, I'll be looking for that. Once again, just so we're clear, on the H1 time frame, which is not my best area of time frame, and I'm not really a bottom feeder, I'll need a break of market structure and then price to come back here. My stop loss there and then hold price all the way there, which gives me a 1:3.6, almost a 1:4. Right. What else would I need to see for this to happen? Well, let's see. Let's draw an extension here that breaks market structure. And then let's say price starts to turn after that. What do we now have? We now have a swing low. So what the nice thing about it is if I could get a confirmation. Drawing a Fibonacci again. You see that there? Price is here where I said most people will be looking, right, at this doji candle, and that is between 0, what and the 50%. So the actual golden ratio for me is this order block here. So this is going to be a very important, determining place. So I've already proven to you that price has been moving in golden ratio areas in terms of retracements, right? So the safe trader would have an entry point there on the H4 time frame and a stop loss somewhere there. The safe trader would do something like that, right? So something like this, and that will still give them a 1:3 type of trade. I could do that, but I would also then like to have the 1 hour trade because it gives me ultimately a higher sell. Remember, it's still inside the H4 order block. That's got a Fibonacci confirmation. So that's EURJPY. If you're looking to sell, good luck there. But you should have sold, despite how busy I was to attend to this thing, at least 3 times by now. And that's it. A lot of people do the module 1 week 3. All right, because I see that question when I'm doing the spreadsheet, and I love the questions, guys. When I bring up these questions, it's not me shunning you down. It's me saying I like that you're thinking. Now come back and get to the answer. So it's in week 4. In week 4 of module 1, I talk about how to compound with the market. In week 4 in module 1, somewhere in here, how to grow a small account. And in this video, it's a 2-hour lecture. We spoke about compounding, and this trade is exactly that. So what you have is, number 1, you have your trade in the extremes, the imbalance trade, the swing trade. The trade that is going to make you the most money because it got in first. You get it nice in there. There's an H4, nicely tucked, beautiful risk to reward ratio. You're looking at this to that, and you're holding it all the way down there. That's your money maker. Once that trade is secured, Leroy, how would I know the trade is secured? Once price, after you've been triggered here, which is where you are triggered, right, in that money maker, starts to make other supplies, all you have to do now is to take those supplies. Same trade idea, multiple streams of income. Because I've got sell 1. I am teaching so good tonight, guys. This is incredible. This is not even supposed to be. War rooms are not like this. I'm just spoiling you guys. This is sell 2. Same. Sell 1, break even. Sell 1 is running risk free. You got $100 US, you can grow it. Don't listen to them about oversizing your lot size. Don't listen to them that you'll be poor for the rest of your life on 0.01. They are lying to you. They are lying to you. I'll check AUDNZD, not a problem. Sell 2, sell 3. Right? There's a sell 2 there. Sell 2 was reacting to that. Sell 3 came to react to sell 2, and there was the take profit right there. And now we're going to be waiting for sell 4. One pair, 4 clean sell entries. And that's how you compound. All of a sudden, when trade 1 takes profit here, I don't know, man. I don't want to do the math and start to calculate pips, and then we do lot sizing for you. But you know, when trade 1 is going to give you 360 pips by itself, and it takes profit. When trade 2 runs at the same time as trade 1 is taking profit, because the exact same place, trade 2 is right behind, giving you roughly about 243 pips. Trade 3 is right behind you. You got 360 plus 243, and then this one, let's get it by the entry. This is important. 167, and trade 4 comes back as also 167 at the same level. That's almost 800 pips on the same asset. Yeah, it took 2 weeks, but you never ever make 600 something pips with your short-term intraday trading and your signal groups. So why not hold price for 2 weeks and just keep adding at proper supplies? Why not just focus on euros? You know, I mean, you kind of like get my gist. Anyways, EURJPY done and dusted. I've got a request for AUDNZD. I just want to see if I have it written down. No, I do not. All right. Okay, fine. Let's quickly run to it. It's just that I want to do these charts in the order that I'm going to remember to set my pending orders for myself and 365 students. AUDNZD should be running the exact same as Euro AUD, right? So price was moving up. Let's give it a little bit of more space. All risky assets are going to suffer due to sentiment. It's going to be strong today. It is strong. Tomorrow it is weak. Blah, blah, blah. Right. So we've got break of market structure push to the upside, and we're in deep search for a governing supply. That's my opinion on this one. Right. Somewhere here, somewhere there, and this could be it. I don't take supplies on the other side of a broken trend line seriously. Right. But this could be it. Can I just quickly see the presidential chart? Nobody asked me this week in the registered students group for the presidential charts. I want to put it out there once again. You don't have to pay for it. Just post on our registered group that you want to see the presidential chart for ABC, and I'll give it to you. When people don't ask, it means they don't know that they need to see it, which means they're not studying their charts as regularly as they think, you know, they will, right? This looks like a pain and structure, you know. Maybe price is looking to do something special here. But anyways, a 3 months chart, there's really not much detail to give, right? Price has been ranging, sell profile asset, price dropped in 2011. Price kind of resuscitated. You see, this is one of those charts that are so different to March of 2020, like all the other risky assets that exploded to the upside, right? So if a war breaks out, you know, the thing is going to fall. But if good news floods the market, this is not the asset I want to run to buy, right? Because even when March 2020, all the other risky assets started to do well, price actually knocked itself, created a bullish engulfing candle in July 2020. Where's March? Oh, this is a 3 months chart. Sorry, let's go to the monthly. Right, even on the governing chart, it's not the most exciting stuff, right? So price, this was it. This was an exciting push. And if you look at all the other risky assets, I mean, markets really broke structure, rallied. This one ran into its structure, and then the structure and the money slanting towards the downside managed to contain it. And markets are coming to make another touch here. My bet is that price wants to go down long term, long term. My bet is that markets want to go down. You cannot serve two masters. AUD and NZD are like brothers, like sisters, cousins. And so if one is too strong, the other one will then have to fall and be weak. On the weekly time frame, we had another trade, on the other side of the trend line, supply slowing down price. I'm not convinced that this will last forever. do have a demand close by on normal candlesticks and otherwise a momentum. You will notice that the demand close by on normal candlesticks could be a buyer's retracement area, right? Markets are not random. So that could be a buyer's retracement area. So if I take this and I take there, do a swing low, swing high, you will see I have my golden ratio here, but I've also got that retail 50% by this green line. And if I switch back to green candles, boom, right? That entire order block, order demand is sitting on a fib level where if price gets down low enough, right, buyers could start to become enticed. And since there's not much going on in our golden ratio area, this is a real possibility. All right, this is a real possibility. Price, of course, I'm not denying this, could do this in the long run. But for me right now, this is a real possibility just based on its proximity to price and the fact that price wants to slowly but surely push up on the daily time frame to catch up with everything. Markets are dropping. There goes that. You can move the long-term arrow where the channel, price created a channel, price broke up, price hit a supply. Price, when it hit a supply, left a demand. Price is now at a demand, right? And this is a rally-based drop, not the cleanest. That is not the cleanest. But it's not bad. It's just not the cleanest, but it's not bad. Right. So this is me. What would I do? I wouldn't buy here. If that's the question, Alan, and you're looking at this immediate demand, I have no interest in buying it. No, I'm saying this knowing that price could leave you behind. I'm saying this knowing that Monday, Tuesday, Wednesday, Thursday could be very good market days, and price could actually leave you there. But personally, I'd rather go with my girl here and take it to Letha area than buy so close to a supply that has not been broken. If I was to buy here, it means I still don't understand, or I don't believe rather what I was saying about pound USD earlier on. If I have a supply on the daily that is still active and not yet taken out, I do not do the opposite of that supply because that is proven to be extremely unprofitable in my life in the past when I used to be very stubborn about markets, when I thought I could just bend markets to my will, right? So somewhere in here, on that 50% line, that monthly order block demand is this weird daily situation, right? Where price kind of like rallied in, dumb traders, some short-term base and a strong rally, but the rally doesn't give us, what we like to see. Would have liked to see, another body candle moving on the upside here, right? But that's not what we kind of like got. And so really, I would just wait to see how this plays out. I think war, sentiment, COVID, Queen, it's just too much, man. It's too much. It's too much. Even if this happens, right? If this happens, I'd rather even take a risk and sell. But, because this is bound to happen, either or. So if I'm going to buy for the first time, it'll be all the way down there. And am I going to sell? I don't think so. Let's go to H4. Let's talk to H4, right? So H4 looks like this. I just want to see if I'm going to sell. Not that if, but rather if I feel like there's an optimum safe place to sell, right? So this I like. Yeah, this I like off the bat. We will look left. We'll look left right now. But I can tell you right now, I would rather come wait here. So buying could happen. I don't neglect that. I'm also don't want you to miss this, right? Lower low. Be very careful. And so what could happen is markets could have a strong candle that will close somewhere here and a good wick to drain the supply. And then you're going to have a high and then a lower high. You see, structure takes time to form, and that's why you get ups and downs in the markets, right? And so that means this should happen, and then this should happen, and another low should happen, and then right? But in terms of taking this buy, just because I've predicted all of that or speculated all of that, it doesn't mean I'm necessarily going to take this buy, because markets don't owe me anything. They don't owe me the path to that sell to happen in that particular way. All right, just to be clear. Guys, I'm doing this for me today and for you, for your own, growth and whatever, but I really need to do this for myself. So I understand if you gotta go, I'm not even gonna hold you, right? But I do appreciate you there. And if we're all sticking around, maybe we can agree to another 30 minutes. If not, you need to go. I did start late. I can rather also I'll probably have to make a follow-up or like an upload of more setups during the week, preferably tomorrow, because we need to know this stuff before the week starts. Trading during the craziness, is never a good idea. From my experience, because sentiment's going to be left, right, center, and so I want to have this big plan, mapped out, right? So I've got that H4 supply, which I like. I just need to make sure, it's not. I just want to see the conviction of this area, like how often has smart money visited this area, how many times have retail traders visited this area. Right. So it seems to me that if I was to do something like this would make sense. If I was to do something like that. So I just wanna make sense of it, right? So price is going down, then price comes down, rally strong in, price pushes up, bearish engulfment, similar retest to either this one or this one, but this idea to sell here is very strong in 2021. And then price all of a sudden rallies all the way up there and then makes contact for the second time. So this is a retest run. Right. So in this zone, right, price has already kind of like flirted on the left and is reacting to a previous area of value, but for the first time. And so this could be a very good reason to see a retest of the previous zone and also really just to honor this imbalance. It's well worth the risk for me anyway. So I'll take a trade here as a supply. Mr. Allen, I hope that helps you, but it's a high risk trade because as you can see for yourself, we already had the fresh touch and now we're having the retest, and I think price is going to drop lower. If markets, however, make contact with the demand, by the way, I will not be here to sell because I'll know for a fact that they're coming strong to remove this area. So I'll have a sell setup there and a buy setup there. I personally am not going to buy anything there. Right. I hope that makes sense. Looked at Ethereum. Ethereum was fun to trade this week. There's a lot of crypto stuff I need to do this week for you guys. And just kind of like talk about the trades. And then because I am dollar cost averaging at the end of this month, I mean, I've been waiting so patiently for Bitcoin to drop to 30,000 US dollars. Bitcoin taking forever to do that. So I will then just, my dollar cost averaging plan will be the second financial knot of the Wealthy in 3 years program. The first one went off in October. Your second month will be what I'm going to do in February. I thought by now I'd have had bargain buys. I thought by now we'd be on 30K, 20K, because I know the Fed is going to increase interest rates soon, but markets are not playing, right? So we spoke about this in the war room. I remember I told you guys Bitcoin had a silly supply. It didn't work. Look out for this one, blah, 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 blah. Prices dropping, prices still falling. I took profits somewhere down here, right, on a sell, and, regrettably, I wish I hadn't, but I'm good. I thrive on 3:1, and then I move on from a trade. Right. So if price removes this area of value, like goes deeper and shows a good strength of bearishness, right? Then, at some point in time, we need to consider start looking for big bottoms for these things. Ethereum, Bitcoin, we really need to start having candid, honest conversations about the bottoms. Because I know retail traders are not ready to accept. This is, likely. However, I don't like to trade it, right? When price breaks the supply and reverses into that supply. So when price breaks this demand and reverses into that supply, that's a possibility. But for that to happen, I think a lot of things need to also happen. So price needs to first fix as swing high, swing low, right? Something like that. Right. So swing high, swing low. If price was to start to form a bottom somewhere, I'm just literally guesstimating, or guessing rather where the bottom is. Then I'll throw in a bearish engulfing pattern because they really drained the buy orders from the demand, and I'll see that my golden ratio area is asking me to come here, and then I need to find the reason why. I need to find the reason within reasonable time frame. So like a daily H4 on normal candlesticks would be important. All right. So on the daily time frame, and also it's the H4 time frame, in this area here there is a supply, an H4 supply, clean imbalance, what. So if price was to go back up, and I'm not in those trades, I would not sell here or there. I would wait to sell somewhere there, and then price would really go down. Okay, so that's Ethereum. And then the next asset for me is EURUSD. I need to polish up my EURUSD entries because life unjalo. Right, so price did something fantastic. This is from the live streams. I think I really used this chart on Friday as well to educate on potential traps, right? Bull traps, bear traps, etc., fake breakouts. There was that potential for this to run like pound to the upside, only for pound to take a 15-minute supply and start to drop. EURUSD didn't even waste your time, didn't even play the games running. It just dropped. It let it rip, right? And so this was, for me, was quite difficult to be involved in as an intraday trader, because for me, my rules were not met. So I didn't get a clean supply. I got a momentum push to the downside that broke market structure, which means there was no ways I was going to get a pending order hit for this particular sell. That being said, we can now honestly look at EURUSD and say, okay, fine, this is where price is right now, right? We are struggling to make it all the way back up. Price seemingly broke out of this downward trend line, seemingly was becoming very strong. All of a sudden, price is now slowing down. Now, if price slows down, price has entered a bullish engulfing moment for EURUSD. Bullish engulfing, demand, happiness, blah, blah, blah. But this is never short short-lived, right? So if price gets into this demand, price is supposed to go up. But if you look carefully, price has already entered the demand profusely. Price is also supposed to only leave at least 50% of the order flows in the order block, and price is really dug deep, right? Which makes this demand a little bit weak, which also makes where we are standing here in this entire area. So let's see if it's not an H4 order block. Right, so in this entire H4 order block, it makes it look very, very, very weak, right? Because soon it will be taken out. And so that's something absolutely to consider. If it's taken out, I will be doing nothing still for a while. I mean, I could do this, start to sell somewhere there if I wanted to. But for the most part, the bigger point is my money is still up there. There's a weekly supply that needs to give daily supply some life. So all you do with EURUSD, especially with EURUSD, is whenever you analyze EURUSD for a decision, at the back of your mind, on the other side of your chart analysis, is DXY. You absolutely need to know what DXY is doing. All right, so I already pulled out the DXY chart, so I won't waste your time. This I need to clean up on our master spreadsheet, because I do believe we've got a couple of, there's no point in going there right now. I do believe we've got a couple of sell orders inside here. And I do think we could play like, fisherman. Fisherman is someone who casts his net into the water and hopes to get many fish. He's not a specialist. He's not after a whale or a dolphin. He just wants whatever falls into his net, right? And that's one way to grow your account. Now, if we do it that way, then it means nothing changes in the pending orders. We have a sell pending order limit here, stop loss out there. But if we do something that I think I need to do, is I'll start to clean up these order blocks right there. Right, all of this stuff, I'll clean it up, and then I'll realize that most of them do not have a fresh touch. For example, this one here at the top does not have a fresh touch, right? But it's not supposed to. It's a PCP. So I'm a little bit conflicted, but a part of me wants to tag it because it wasn't even tagged properly here. It wasn't really an issue that money was drained from it. That's why it's been running around like a non-PCP, but it is indeed a PCP. Right, and the next area of value is somewhere here because that's where people are. And then lastly, where price is right now, which is how I would enter for the big one. I'll put an entry point there and a stop loss there. But I'm going to have to tweak these just a little bit, just so that I maintain good risk to reward ratio. That's Euro USD, Euro AUD. Just going through this War Room 52 charts, right? So not much small boy, cowboy trader situation vibes on the other side of the chart, but for the most part, it's been good. Just trying to see why markets would want to push to the downside. Okay, moving forward, Euro AUD, I guess it's one of those hit or miss. Euro Pound. A lot of downside momentum. I think I've been very clear about this particular chart. Although I've also been clear that I've been waiting for this since Boris Johnson was elected as prime minister. So this is actually quite a big deal. Markets came very close to touching that area, and then were forced back down. If we come to the daily time frame, I might have to clean this up for our spreadsheet because I was still very unclear. But it looks like the area of value is this big, which is actually not as big as we think. For a daily swing, this is like 98 pips. Right? Normally hours are like 100, 102, 103, etc. But for a daily swing, that's big. You could obviously reduce this tremendously by going down, but I just don't want anyone to go missing and getting lost in this small time frame. So just be very mindful of that. That you could absolutely come to H4 and start to fine tune these areas, right? So for example, true supply is always right at the top there. You can see with these pending orders that markets have already met each other shoulder to shoulder, and they've fought the good war, right? So that's one way to look at it there. The other way to look at any of this stuff in the H4 time frame is the fact that this is going on. Clean imbalance as price leaves. Okay, so you can see that it's all the way to the end. And I honestly would, I really would. So I could do something, I could get myself re-triggered in the Talitha areas, right? Reducing the risk reward ratio. First it was like what, 100 something pips. That's like 23 pips, literally reduced to less than a ruler. But and then pray for good fortune, right? Pray that price comes to you. Pray that it takes, it's sweet time to accumulate before coming to deal with you, in a very decisive manner, right? But for me and my house, I think I'm just gonna wait a little bit. I'm just going to wait a little bit before price, makes its way in. But this is interesting, right? Talitha area battle, price pushing price backwards. That all of that stuff is in there in this chart, and I'd love to wait for where my white line is on Euro Pound, Euro Swiss franc. I think I'm going to do Euro Swiss franc, guys, and then after this, I'm just going to call it a day. We'll look at NASDAQ, but there's not much to talk about on NASDAQ, right? So telling you guys, I'm very bearish on that asset for a very, very long time. I hope no one felt I wasted their time by teaching. I'm a bit conscious of how you feel, but I always do and move according to how I feel is the right thing to do that will help you for that week, right? So price is still at a PCP area, not a engulfing pattern, so price could come back up. PCP area being supported by PCP supply, not much to it. On the daily, I'm still waiting for a perfect setup, and price will come up there, right? Okay, so not much has changed. This will finally come into play on the pending order list, and I will add it, and we just wait. We wait for price to come there. NASDAQ, guys, just be very careful. Out of everything that I've told you, I still believe we're going to be risk off. But more importantly, NASDAQ, for the first time in a long time, has cracked through the wall of defense. Now, if you're a war room follower, you will know we spoke about this many times. You will know that there's one place here that Dero is waiting for where stock market will have fallen by 20%. You will know that sometimes I do fight and do my part to prevent a stock market crash. I buy into equities, I participate, I love Tesla shares, so I stock trade them and buy them all the time, blah, 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 blah. But at the end of the day, markets must do what they want. Markets have breached through supporting trend line 1, supporting trend line 2, and they were very much aware of what they were doing. And Wall Street continues to tank, tech stocks, right? And once we cross over this 20% area, by the way, then we're in an official market crash, and I believe oil will have gotten to 100 and it will just be the perfect storm. So watch out for that. Now, obviously, if you've been on the wrong side of the thing, you finally got liquidated, right? It happens to every single person. Definitely happened to me many times in my life. So don't be too hard on yourself. Be forgiving, and then also realize the following things about how to make this whole thing work. The Nasdaq will continue to fall, in my humble opinion. As long as this war situation is not cleared up, it will continue to fall. There will be an itch to try and sell here. Avoid it. You really want to come back to the ladder, right? This ladder has been around for a while. It might be a wise, thing to come back here, bearing in mind class effect, or come in a little bit higher into this area like that, right? Into that higher supply, that premium supply. Guys, if it's okay with you, it's absolutely dark in my office. I didn't even get up to switch on the lights because when we started filming, it was bright. But I do think it's time for me to call it a day. I apologize for a shorter version of the war rooms. I hope this was helpful to you. I promise you with everything in me to upload a second war room tomorrow as we go through assets, because I need to refine all these trade ideas, look at all of them at once, and then move to put in pending orders. We will get news about the war tomorrow, the usual stuff. I'm going to ask you guys to please just keep the faith. But by keep the faith, I mean just remember supply and demand. Supply and demand was a big thing during the 2009 crash. If I'm your mentor, that's how I developed and the people I learned from. This is the strategy. Our strategy outperformed the stock market crises, all of them, by the way, right? There's a pure approach to institutional trading, right? This week, just a heads up, I think we've got CPI this week, don't we? Oh, it's already happened. Oh no, there's nothing much this week. All right, so real quick this week, just so when people are not surprised, like why is this going on? Why is this going on? Euro tomorrow, Monday will have a little bit of PMIs, more like CPIs, consumer PMIs about manufacturing. So they'll be looking at their numbers. Germany is the heart, the economic engine rather of the entire eurozone. So German manufacturing numbers are absolutely important. If they are positive, euro will get some bullish injection, right? So watch out for that. But we don't trade news. I'm just telling you to look out, right? NZD, right? I do think there will be a rate hike somewhere in here. Look, NZD is going to be strong on Wednesday. Let me make a note of this because then in my war room video tomorrow, we can look at a couple of NZD pairs. Let me just make a quick note. NZD pairs. Right, because I think there's going to be a dance here. There's going to be a serious dance in the market. I don't know why they'll keep them the same. I think a normal 0.25, nothing too crazy. So basically 1.25 ish would be a normal thing to expect in the market. Those of you don't really follow the press conferences and watch the live events, then hey, thanks very much. Walton 3S token because I have received a reply. I need to join. Oh, you want to join? You have not received a reply. All right, Mr. Titus, I will sort you out today before I go to sleep. You'll be the first person I'll do that one email tonight. But check tomorrow because I'm gonna run straight for supper and just to catch up with my family. But I'll sort you out tonight, buddy. Those of you want to join, if you want to join the academy course, just look for our links, guys. And the wealth in 3 years. We're gonna focus a lot on the metaverse stuff. All right, for the first 4 months this year, and network coins because crypto is going to explode. It needs to go down to explode. That's what people don't get. Right. So a lot of that stuff is going to be mainstream, and I'm going to show you guys where I think is a good place to dump your money. Right. So there's not much going on this week for me to care about. I mean, the core price index. Do we really need another inflation indicator? Right. The big numbers are happening next week, ladies and gentlemen. We're going to have NFP. We're going to have ADP. We're going to have another CPI just before FOMC. And so the dollar is getting prepared for that. Right. If this is the only war room you watch this week, God bless you. Have a beautiful week. Check out our Money Heist podcast, guys. The stuff happening in there in my humble opinion, as a trader, and I love markets, I think I'm doing my best work in the podcast. And I'm saying this because I myself, I am learning so much. Some of these books I've already read, and to come back to them, it's like, woof. If reading them 3 years ago got me to where I am today, when I reread them, I'm like, oh my God, I never used this technique. I never thought about it like this way. I am thoroughly enjoying the podcast, right? So see you guys tomorrow for War Room and all that other stuff. Good night, everybody. Thank you so much. Cheers. I'm ending the stream. Cheers, everybody.